Sam, you seem to be on a tear lately when it comes to deal making, most recently with South Korea's BitHum. And of course, media reports link you to any crypto exchange that appears to be struggling. So, first, what's the strategy with BitHum, and what's the criteria that you're using when you're picking your acquisitions right now?
So, you know, when we're looking at the acquisitions, there are a few different theories behind them. Some of these, and I think that you can look at the borrowed lending platforms that we interface with, are primarily about bailouts. They're primarily about kind of buttressing the capital that these places have in order to protect consumers and to make sure there isn't contagion spreading through the ecosystem. That was certainly the reason that we started looking at Celsius, at BlockFi, at Voyager, and ultimately the reason we ended up sort of moving forward with Voyager, with BlockFi rather, on that respect, was because they had good risk management processes that had put them in a place where they were able, with a bit more cash on their balance sheet, to move forward in a strong direction. That's sort of one type. The other type that we look at is about expanding what our business is. And we tend to not view these as tech acquisitions so much. Some of these are looking at the regulatory side, some of these are looking at the customer base side, and some of these are really international expansion sides. And then of course there's Storybook for All, Good Luck Games, which is a little bit of a different story, which was a totally new industry that we wanted to explore interfacing with.
Yeah, Sam, I wanted to get on sort of the other side of that, which is the Voyager joint proposal that FTX and company put out on Friday, and it's since been rejected. But I was just curious, what was the idea behind that proposal, and is the deal dead?
So, yeah, it's a good question. And, the deal isn't necessarily dead. Like, ultimately, shareholders will get to decide what they want to move forward with. And I don't think we've seen sort of the final story on that side. We don't know for sure what will end up happening. But the philosophy behind it basically was, look, like, bankruptcy proceedings suck. They suck for everyone. They're really unpleasant. And customers end up getting screwed in a number of ways. One is just like, by the time bankruptcy is over, a lot has been drained from the funds in the first place by the legal process. A second is that it just takes forever for customers to actually get their funds back. And a third, to sort of pile on to all of that, is that, in the end, you just don't actually have what you think you have sometimes coming out of these bankruptcy proceedings, where, if the asset prices move, customers can be exposed to that and actually end up with whichever is worse, what it was trading at the beginning and it was trading at the end of the bankruptcy proceedings. Those are all reasons that this can be a really unpleasant process for customers. And the core thing that we were thinking about is, how can we just make this as clean as possible for users and just not worry so much about trying to make money off of it or anything like that. That was explicitly something we were trying to avoid. With our offer, it was just like, what's the cleanest, quickest thing we can do here for customers? And that was basically, look, all the assets that remain with Voyager, we'll give them out to the customers pro rata, no nonsense. And we'll do that as soon as possible. We're just like ready to move on that, if and when the proposal would get accepted. And we even just made it non-binding. So if customers, even if that proposal were in general accepted, proposals could, customers could decide they don't want to do this. They want to go through, the longer bankruptcy process. And look, if that's what they want, that's fine with us. We don't want to be prescriptive about this, but we wanted to give them a more direct option.
Hey, Sam, with these recent acquisitions, you, FTX, are getting more and more control of this industry. I think it's a troubling thought for some people out there when they look at and they believe in the decentralization of crypto. And that's one of the most attractive parts of this industry to them. What do you say to that? Some of the critics out there that are saying, hey, you're simply getting a bit too big, or you're getting a little bit too large here for this space for just to have FTX to control.
My basic response is, look, on a lot of these deals, a lot of these bailouts, we reached out to everyone we could in the industry and said, hey, do you want to come in this with us? Do you want to do it yourself? Like, we'd love someone else to take this on. And we don't want to be the only ones doing this. We want this to be a broader, industry effort. In the end, the response we got from sort of other investors was basically, wait a minute, some of these companies look like they might have some financial troubles. Or so, like, yes, that's correct. That's why they need help right now. Like, I don't know what you're expecting. But most people just didn't want to move on it because of that. It wasn't what they viewed, their role in the ecosystem to be. They wanted to do like really safe, sound, high upside investments and not sort of like, investments that might lose. So we would love there to be more people involved in this. I think that would be great. We'd love other people to step up. That sort of didn't happen very much. And we think the single most important thing is that we do backstop the industry, and that is paramount. And, we'll do what it takes to do that. But yeah, ideally, other people would be joining in that with us.
So Sam, though, at least for right now, you do seem to be considered the sort of the bank of last resort for a lot of these struggling crypto companies. But how long can that last? How long can you keep bailing out some of these companies in terms of how much funding there is available to really keep propping the industry up?
Yeah, it's a good question. We obviously have to be conscious of that, right? And sometimes when we end up passing on one of these, right, when we end up deciding there's not really much we can do, a lot of the context often is, we know we don't have infinite ammo, right? We have to be like smart about how we use it, and we don't want to flush billions down the drain on one hopeless endeavor. Like a few billion is ballpark the amount that we have to operate with here, and so we can't bail out an infinite amount here, but we can do a non-trivial amount. We have done some, and we're making sure to keep enough in reserve that we could do more. If there, came a point where it was really valuable and important, and or urgent to do so. But yeah, it's not infinite. And, we would really love other people to come in and sort of like, help add to this pool of resources.
And Sam, obviously, it's a huge week in business. We have big tech earnings, the FOMC, and then obviously the GDP coming out. And I'm just curious, in terms of what seems like the most impactful thing for the crypto market. Like, what are you paying attention to this week?
It's a good question, and part of the answer, honestly, is that things have become pretty correlated in a lot of ways. And I don't necessarily want to say that's a great thing, but it is, I think, a true thing. And more specifically on that, we've seen, the market get to a position where really what's driving all of this is, expectations about future inflation or lack thereof, right? And when you see market movements, a lot of what's happening is that there's been a shift in sentiment about whether monetary supply is going to be increasing or decreasing. And that's all coming from how will the Fed respond to these numbers coming out. So there's a first order impact of like how our earnings, and that will matter. But what's going to matter much more, frankly, is the read through from those earnings and from FOMC and other things to expectations about whether fiscal and monetary policy is going to continue tightening or is going to start signaling that it has done everything it needs to do and that, they're in a more stable place going forward. That's what I'm looking for the most, is the Fed's reaction and, frankly, Congress's reaction to these earnings rather than the earnings themselves.
So, Sam, say tomorrow we do get a 75 basis point hike. That's largely what is expected on the street, but inflation doesn't get under control and the Fed is forced to be a bit more aggressive than we maybe initially thought in the fall. What does that mean for crypto?
I mean, that's going to be a decrease in all risk asset prices, including crypto, most likely. Obviously not investment advice, and who knows for sure exactly what's going to happen. But, my strong suspicion there is that you're going to look at everything that's being priced versus the US dollar right now, and that includes crypto. That also includes stocks. And you're going to see those prices fall versus the dollar, or really what you're going to see is the dollar rise against risk asset prices on the expectation that monetary supply will further tighten because of the Fed feeling like they have to further reduce monetary supply in response to persistent inflation. On the flip side, if you see inflation look like it's starting to fall, you may see the Fed start to back off a little bit and say that they don't need to tighten more. That would signal a relative increase in monetary supply, decrease in the value of the dollar, and increase in risk asset prices, including crypto.
Yeah, on that note, just outside of the macro, cryptocurrency, for a lot of cryptocurrency advocates and investors, they want to see, more usage, obviously, of it not just necessarily of Bitcoin, not just trading like a tech stock or something like that. So, what kind of events are you paying attention to in the near future? I mean, the Ethereum merge seems like an obvious one, but for usage.
Yeah, it's a really good point. And right now we're seeing high correlations because a lot of what's happening is, things coming out of the Fed is, information about expected interest rates and US dollar supply, and those are dollar moves. But things that are going to be most important long term are, the underlying technology and use cases. And, what's sort of like biggest and most important there, I think basically what we're looking at is where is this going to see adoption first? I think the ETH merge is going to matter. I think more generally, blockchain scaling matters a lot, right? Do the fastest blockchain succeed in getting to a million transactions per second? That's going to be a key thing to watch, because if they do, they're at the point where they could support global payments networks, global social media networks, global markets. If they fail to scale, that's going to limit the amount of adoption that they could get. That's going to be one thing. And then whether we start to see enough adoption that payments could plausibly happen over it, that both the buyer and the seller in a transaction might be using crypto. That's the second thing. And the third thing that I'll say is regulatory clarity in the United States. Huge thing for the industry, huge thing for protecting customers, and also a huge thing for allowing the industry to move onshore. And I expect updates on that over the next 6 months as well, and I'm optimistic about that.
Certainly lots to watch, and hopefully some of those transaction fees end up going down as well. A big thank you to Sam Bankman-Fried and our very own Dave Hollerith. Thank you both.
One of the world's largest crypto exchanges is announcing a big partnership today. FTX making a strategic investment in securities exchange IEX. The size of that investment has not been disclosed, but we've got Sam Bankman-Fried, FTX founder and CEO, joining us alongside Brad Katsuyama. He's IEX co-founder and CEO. Sam and Brad, it is great to have both of you on today. A big partnership. And Sam, we saw the release go out, framed as this partnership helping to shape market structure for digital assets. Talk to me about how this partnership came about and how you see it moving forward.
Yeah, absolutely. So, I think that the core thesis of it is, first of all, we are experts in digital asset market structure, and IEX is, are experts in securities market structure. And so together, we're excited to try to tackle digital asset securities market structure. And the other side of this is they are the most innovative of these securities exchanges, and so we're really excited to try and break new ground with them.
I mean, who doesn't love a little bit of market structure here? Let me bring in Brad on this conversation. Why the partnership on your end? We know that you have made a name of IEX off of the need for investor protection using speed bumps to kind of level the playing field. Do you feel those types of things are needed in the crypto digital asset space?
Yeah, I don't think a speed bump in particular is needed. It was purpose built for equities. I think here what we have is the opportunity where market structure and regulation are being shaped. From our perspective, we think that we have a bunch of institutional investors who are interested in getting involved in this space. We wanted to get involved ourselves, and we needed a partner to really do that. And FTX stood out. Sam from the beginning has talked about regulation and the importance of scaling the industry, helping it reach its potential. And from our perspective, very excited about the partnership and really looking to help kind of build that bridge between the industry and the regulators, much of the same way we've done in equities, where we've innovated inside of a very regulated industry. And that creates a partnership with the regulators that we hope to bring to this asset as well.
Sam, let me turn back to you. I mean, it's a very interesting time for the exchanges. SEC Chair Gary Gensler speaking yesterday, talking about the idea of wanting to segregate some crypto trading platforms from market making. How does FTX view that stance from the SEC? And how do you view that within the evolution of what you want FTX to be 5-10 years from now?
Yeah, so I mean, I think that when you talk about separating market making from the exchange functionality, I think that's a pretty difference between something like a single dealer platform and something like an agnostic, equitable order book. And I don't think I'm sort of like a radical on this or a purist, but in general, I think that there are a lot of things to be said for having, truly agnostic, markets technology that isn't directly related to dealers.
I mean, on that front, Sam, yesterday we did hear from Gary Gensler those same comments where he said there's no reason to treat the crypto market differently just because they're using different technology. Is it really as simple as that? Applying the regulation that's set aside for the equity space in crypto, are they inherently different?
So I think the same principles apply. right? When you look at the principles of customer protection, the principles of transparency, right? Disclosures, anti-fraud, anti-market manipulation, anti-financial crimes, all of those port over very directly to the digital asset ecosystem. And there's no reason that you need totally different principles for this. That being said, obviously some of the details are a little bit different, right? When you talk about, for instance, registration of assets, right? Instead of talking about who's the board of directors of this blockchain, because usually the answer is there is none, right? You might talk about what is the on-chain governance mechanism of this blockchain. And so again, it's the same principles, but I think that you have to go through some details which are different in terms of implementation.
Brad, you've also weighed in on the regulatory front, saying, it's really important to get the regulation right so you have a well-defined crypto market structure. And you've talked about, at least in the securities, the equity side before, about the need for fairness. When you look at how crypto's traded today, how the exchanges operate, do you think the playing field is leveled?
Yeah, I mean, I think, the exchanges, I think FTX in particular, I'm a client and user of FTX, have done a great job from an investor perspective. And I think, as Sam said, there are parts of the equities market, let's say, as a regulated market that we think port over to digital assets. And I think there's certain parts of the equity market structure you don't want to replicate. And from that perspective, I think there's a lot of value that could be added in our firms working together. And we're excited. We're at the start of this journey. There's a lot to be discussed on the regulatory front, and I think that we're excited to engage in these conversations and have this ongoing conversation with the industry and with regulators as well.
Sam, I want to ask you a broad question here, and let me know if I get a little bit lost in the sauce. But market consolidation seems to be one issue that not just Gary Gensler, but everyone in the crypto community is flagging, right? You have some people wanting to plant the flag and say, we want to be the largest holder in X currency or Y currency. In some cases, some people want to be the biggest holder in Bitcoin, for example. When you think about your role as a crypto trading platform, how do you kind of delineate what's the difference between decentralization and then too much market concentration?
So, I think there are a lot of tricky questions here, but at its core, the way I think about this is from the perspective of consumer choice, right? Is from the perspective of you want to have a competitive environment where there are multiple options available to users and they can choose the one that they want. And I sort of view it as, the goal isn't to particularly enforce or to particularly attempt to stop, some amount of market concentration. I think that the goal is let the market figure.
Yeah, I asked that question just because, again, I mean, it's hard to tell exactly. I mean, you can't put a hard number on exactly what the market cap is today because it's not going to be relevant tomorrow. But it just seems to be interesting because if there is going to be one or two people holding the large majority of a given cryptocurrency, the price action and the liquidity is very much different. And I imagine that as a trading platform, you want to have your ear to the ground on those types of things. So I just didn't know if there was anything that was kind of interesting in terms of trends there.
Totally. And I think that, that's actually pretty similar, I think, to what happens when you look at startups, right? When a startup lists, sometimes the core team owns 5% of the equity of the company, and sometimes they own 75% of the equity of the company, right? And I think that frankly does have pretty large impact on what the market is like for that stock. I think that you see really different dynamics happening. I think that in the end, people tend to think that markets are healthier when there's more diversification of who the holders are of it. But I think an important counterpoint to that really does matter is you want the people who own who have a stake in something to be the ones who are impacting it, to have alignment between the people who are pushing something forward and the people who have exposure to it in order to incentivize great products.
Sam, moving away from FTX specifically, a more personal question for you. There was a really interesting profile I found on Bloomberg about you specifically that ran just a few days ago, talking about this notion of effective altruism, essentially saying that you were in on crypto to make money so you could give it away. when you think about that specifically, I'm just curious what the end game is for you. If it is about giving that wealth away, at what point have you made enough?
It's a really good question. And I think this is really fundamentally important for how I think about what I do in my life, right? When you think about yourself personally, about spending money on yourself, how much can you spend usefully on yourself, right? You can buy nice food. You're talking about hundreds of thousands a year, right? You can get to millions a year with like fancy things, but like after the 10th car, it's not clear what you're doing, right? Like it's hard to spend more than millions a year in like an effective way on yourself, even if you really wanted to. And I think that's why we see super yachts, because a lot of people literally can't figure out anything else to do with their money. When you take a step back and think about it from an altruistic perspective, from a donation perspective, right? It would take billions a year just to eradicate a single sort of neglected tropical disease. And there's a lot of them. And that's only talking about global health in terms of existing, diseases that are spreading. And you can look at like, what's the scale of like the US government budget each year? The answer is, trillions, right? And so when you're talking about having impact on the world, I think that, the point at which there's like nothing more to do with resources to help make the world better, I think you're talking about pretty big numbers. I think at least tens of billions, if not hundreds of billions, and, maybe trillions.
I mean, there's no secret, Sam. I mean, the crypto space growing so quickly, that's one reason why you have amassed such a large business yourself. I guess I'm wondering, do you feel that there's a stigma issue in the crypto community? Because there's the stereotype, perhaps perpetuated by memes, that these crypto people are just, get rich quick types of schemes. I just want to buy as many Lamborghinis and yachts as I possibly can off of the money I made off of X, digital asset. How do you feel like you're trying to address that?
There's absolutely some of that, and I think it's not super healthy for the space. But I think it's worth putting it in context, right? In every industry that you look at, a lot of people are there to maximize the amount of money that they make. That's what they're doing. And, the same is true in crypto. Now, the fact that there has been so much wealth generation over the last couple of years in crypto means that really gets highlighted in the ecosystem. But I don't think that the people in the ecosystem are fundamentally different from other ecosystems. And I think that as the volatility of the assets calm down a little bit, I think that we're going to see a healthier relationship between money and people in the crypto ecosystem.
One of the biggest names in crypto, FTX CEO Sam Bankman-Fried, SBF, as he's also known. Thank you for joining us. So a $32 billion market valuation in 3 years, and that's despite bear market worries and still expanding then with crossovers into gaming and more. How did this rise happen so quickly, and which sectors are providing the most interesting opportunities for collaboration or perhaps disruption going forward?
Yeah, thanks for having me. I think that it's obviously a testament to the team that we have and everyone who's been working hard on this. I think the biggest things that we were targeting when we started the company, I think still see as the big drivers of it are, a combination of seeing a really compelling opportunity where the existing companies were not as strong as they could be, and going for it. In terms of where we're looking, I think obviously we're looking at gaming. We're looking at what's going to happen with NFTs there, and seeing really big opportunities in the space, which we're excited about, and excited to help be the back end, hopefully, for a lot of the whatever the metaverse ends up being.
Certainly. And $32 billion valuation, as Rochelle mentioned a moment ago. I mean, you've downplayed expectations for our rushed IPO. But after the consolidation that we've seen, especially in trading platforms a few years back, Morgan Stanley and E-Trade, Schwab and TD Ameritrade, do you anticipate that we're going to see tie-ups among crypto platforms, considering the multitude of different end users that you service, as you mentioned a moment ago?
I do think so. And I think we've, in fact, already seen some of this. I think that we've already seen a number of smaller platforms start to be acquired by larger ones. We've acquired a couple ourselves, as have a few of the other big players in the space. And I think that I do just expect that trend to continue for exactly the reasons that you're citing.
I mean, and it's really incredible because obviously crypto has come such a long way from obscurity to then retail investors sort of jumping in and out and that causing wild swings, now to having these large institutional investors in there as well. Now, on CoinMarketCap, when you compare Bitcoin to the biggest companies and assets in the world, it's one spot above Berkshire Hathaway and one below Tesla. So how are these evolving types of investors then really shaping the market?
Yeah, so far we've definitely seen institutions start to get involved in the space, but it's been much more of a trickle than a deluge so far. We haven't seen sort of mass institutional inflows in the way that I think some people were anticipating. And I think a lot of the reason for that is that, first of all, these tend to be slow-moving companies, right? Like these are just companies that are always going to be methodical about how they enter. But in addition to that, I think that there are a lot who are waiting for more regulatory clarity before they feel comfortable diving in. Those are, I think, the two biggest things that we're seeing, sort of like institutions on the lookout for, in order for them to feel more comfortable, making sort of a bigger imprint in the space than they have so far.
Now, with the inflows and the volume growth that you've already seen, you've already been profitable, and then the target for 2021, that was $800 million in profits, from what we understand. Considering the early 2022 volatility, do you anticipate that FTX can reproduce or replicate the same level of profitability this year?
I'm optimistic that we'll be able to grow it. And obviously, I don't know for sure. It depends on what happens in markets, but we had a large amount of growth over the course of 2021. We have continued growing. We are, our average sort of volume, so far in this year has been greater than our average volume was in 2021. And there are a lot of large areas for growth that we're hoping for, over the rest of the year. I think especially as we see how the U.S. regulatory ecosystem ends up, unfolding.
Now, shifting gears, I want to talk about that Super Bowl ad, obviously with comedian and well-known skeptic of everything, Larry David. Now, a lot of people can relate to that. A lot of people are still sort of on the fence, don't really know how to feel about crypto, even though we're this many years in. Now, in a statement, you said we need to meet people where they are, and that means embracing skepticism. A lot of people who are now the biggest advocates of crypto once had significant reservations. So with so many crypto ads and platforms out there, how did yours pay off then in terms of the interest generated as well as new signups, people really trying to get more interested in this?
Yeah, I mean, I think it was huge in terms of the amount of interest that it generated. We got a lot of really positive feedback and reception from it, create a lot of buzz. And I think overall are pretty happy and excited with that. In terms of actual signups, interestingly, that's not as much our target. Obviously we want signups and I won't be one to speak against them. But we've much more been thinking about how can we get our name out there so far, then how can we maximize growth, over the next few months. There's a long game ahead of us here. And, given that, I think we're just a lot more concerned with where this could be going, in the long run and how we can build up, who are as a brand rather than doing anything we can to get, as many registrations. One sort of data point relevant to that is I think our sort of, Twitter account grew by something like 50% in following over the course of the ad.
Wow, so certainly effective there. Now, in terms of long-term strategy, I also want to talk some of these partnerships that you have with some of the most recognizable brands in the world, including Major League Baseball, the Miami Heat, Riot Games, as well as a number of celebrities and athletes, Tom Brady, his wife Gisele Bündchen, Steph Curry, Trevor Lawrence, David Ortiz, and even at the college level, UC Berkeley. How does hitting all these different demographics at once play into your long-term vision for the company?
Yeah, I mean, we think that crypto is an area that, is going to have appeal across a large number of different segments and demographics. And we want to be able to target, as many of them as possible and really reach out to as many people as we can. And so I think that's a big part of trying to broaden out the base of who we're reaching, with our partnerships. And then the other thing is just, really, as always, trying to focus on which are the partnerships that we feel really good about, that we feel really good working with the partners on, and that we feel will really bring a lot to our company long term.
FTX CEO Sam Bankman-Fried, of course, known colloquially as SBF. Thanks so much for taking the time here with us today. We certainly appreciate it.
Thanks for having me.
Most Bitcoin bulls are staying true to their outlooks for the crypto, even as it has had trouble reclaiming the $40,000 level, and regulations are likely looming. Let's talk more about this with FTX co-founder and CEO Sam Bankman-Fried. Yahoo Finance's David Hollerith is here as well. Sam, good to see you again. You're hot off another capital raise, $400 million, valuing your company at $32 billion. Help us understand how you've been able to raise this amount of money, just given the price declines we have seen across the crypto market.
Yeah, I mean, I think one piece of it is that we've continued to have strong growth in our market share over the last year. We've been really excited to see that, and excited to see that continue. I think we've also been building out our regulatory suite quite a bit, and are excited about what's coming there in the next year. And I think the last piece of this, which is pretty relevant, is when you look at sort of the difference between public and private markets right now, there's definitely been some real selling off in public markets. But in the venture side, I think markets have remained fairly strong, and we've seen VC funds continuing to raise substantial funds over the last month.
Yeah, and Sam, getting back to sort of the crypto side, so obviously you started an exchange originally because you were, at least personally, somewhat dissatisfied with the products that were currently being offered. And sort of compared to something like the stock market, crypto market structure is still fairly new. So I was sort of curious, with all these announcements, you're sort of going in a lot of different directions, a lot of different possibilities. I was just curious about some opportunities for improving the crypto market structure that you're interested in, particularly with FTX.
Yeah, absolutely. And I think we're really excited about what we can do there. I think that one piece of it that we've seen is, our ability to build out a robust risk management suite and, margin engine, which can sustain, stable markets even through 20% market moves, 50% market moves that we've seen. And I think that's something that we're, really excited to have built out. It's a 24/7, 365 risk engine. I think another piece of this is starting to look at the model that we have in cryptocurrencies and what this could mean for the financial sector more generally, where everyone has direct and equitable access to the platform. And we think this is really important, that we don't charge for market data, we don't gate our market data, and we don't gate market access to people willing to pay tens of millions of dollars a year for access, licensing, co-location, and data fees.
Yeah, and Sam, I know you're not necessarily a security expert. I don't want to hold you to that, but I'm curious about your opinion on this. Wormhole, the token bridge, so sort of it's like a software that allows people to take cryptocurrency on one blockchain and move it over to another, was exploited yesterday, and it looks like still developing, but it's something like a $321 million exploit. So I was sort of curious, the whole idea of a token bridge is that people would be able to move assets across blockchains. So I kind of wanted to know your thoughts on what this means in terms of the development of token bridges, whether or not people would do that, or maybe this is just growing pains.
Yeah, I think to some extent it's growing pains. And I think the other thing I want to say is bridges are hard. We've spent years building out the wallet software that we use for FTX. And, it's hard even just to build in the functionality, let alone the security side of it. I think that, being able to offer a service which is both fast and efficient for users, but also secure, it's not a trivial problem. I think it's something a lot of bridges have struggled with. I think they're making progress. I think the Wormhole team, I think it's a strong team, and I think the fund's been topped up. I think customers will end up losing funds from it. But yeah, I think it's real growing pains, and I think it's something that we may see from a lot of bridging providers.
And Sam, it's Julie here. I wanted to follow up on that a little bit because, of course, that's just the latest hack that we have seen or security vulnerability that we have seen. So why do you think this keeps happening? And what do you think platforms need to do differently when it comes to their security approach?
So, and I, with a lot of caveats here, including that I don't know the details of what everyone is doing right now because much of it is not public.
Right.
You generally don't want to make every piece of your security suite public. But my general sense, for what it's worth, is that the thing that people are most likely to miss is having various sanity checks all over the place. You can try and build a perfect system, but the truth is no system is ever perfect. And I know a thing that we spent a lot of time doing at FTX is making sure that in addition to the standard set of checks that we have in the standard protocols and procedures, we have a number of just heuristics to try and alert for unusual behavior, to try and flag things for review, and generally to try to have redundant checks in place for are each of our wallet balances exactly what we think they should be, and if not, then something weird happened, and that's probably something to investigate. And so I think that's sort of my biggest piece of advice, is that in addition to the standard protocols, think about a lot of sanity checking that you can integrate to your wallet or bridging software.
Sam, I think the crypto industry generally agrees that regulation is coming, and in some ways it is good. Do you think the SEC should be the one that regulates the crypto industry?
So I think it's mostly inevitable that both the SEC and the CFTC are going to play a role in regulating the crypto industry. They're the two primary markets regulators in the United States, and crypto is a markets-based system right now. I think that you're certainly going to see digital security tokens having at least some SEC purview, and you're going to see digital commodity futures having at least some CFTC purview. I think that there's a lot left to be resolved about what happens with spot commodity transactions, about what happens with stable coins, and what happens with tokens that fall somewhere in between categories. I think that a joint regime could make a lot of sense here between the SEC and CFTC. I think that you could see, especially on the clearing, custody, and sort of margining side, the CFTC playing a large role. It's what they have a ton of expertise in. I think the asset issuance side, the SEC is almost certainly going to end up playing a significant role here. And that's my best guess for I think what we're going to see going forward.
And Sam, you actually got into the crypto sector as a trader originally. So I have to ask, you clearly are spending a lot of time on philanthropy and your company. But, are there any sort of opportunities or segments of the market that you're watching with interest right now?
There's always a lot of interesting things going on, and I can't help but watch markets. I don't trade anymore, although I certainly enjoyed it, years ago when I was actively. I think that things that I'm looking at the most right now are, first of all, which things are resilient through down market moves. I think that tells you a little bit about what the real kind of firm backing is behind some of these tokens, and what the core community is. I think that, as always, looking at layer ones, layer twos, and seeing how they're performing. And then I think the last thing that I'd say, which is really interesting, especially through volatile markets, is to look at funding rates, look at interest rates on borrow markets in crypto, and see if you can line those up with market demand and supply, because there's often really interesting relationships between whether futures are trading at premium or discount, and what that says about which direction flow is going in. And then you can try and line that up with, well, what's a Bitcoin borrow rate, what's a US dollar borrow rate in crypto.
FTX co-founder and CEO Sam Bankman-Fried, good to see you again. Thanks for hopping on. Yahoo Finance's David Hollerith, good to see you as well.
We're going to turn things up a notch here a bit at the One Hotel in Brooklyn with our next guest, who needs no introduction, but I'm paid to give them, so I have to. Sam Bankman-Fried is a man that you know well by the term SBF, the founder and CEO of FTX. Just some interesting notes that I'm sure everybody here in person knows. But at 29 years old, SBF is the youngest billionaire in the U.S. and the quickest to reach the Fortune 400 list. But I like giving him a different moniker, not only one of the nicest people in crypto, but one of the smartest as well. SBF, thanks for taking the time out of your day down in the Bahamas to join us. How are you doing over there?
I'm doing well. Thanks so much for having me.
I want to get started here with just how much is going on at FTX, because there's a bit of a joke in the crypto space that if you were crypto reporter, a full-time job would be covering all the things that are going on there. You've raised more than $1 billion on the year. Here at FTX US, you're building out the NFT space, adding that capability there, as well as derivatives as well, the first through your acquisition of LedgerX. Talk to me about, I guess, all the money that you've put behind raising the FTX profile. Not only Tom Brady, Steph Curry, the Miami Heat arena, also UC Berkeley. There have been a lot of deals. So how do you measure, I guess, all of the money that you've put into that effort? What are you seeing? Is it all just user growth that you're looking at, or how are you measuring it now?
So there's some user growth, but that's not the biggest immediate goal of it. We are really coming from behind on a name recognition perspective. We've been around for about 2.5 years. It's a lot less long than the other major players in the crypto exchange business. We don't have tens of millions of users. We certainly don't have 100 million users. And what this means is that when sort of someone is looking to get involved in the crypto ecosystem for the first time, especially 6 months ago, there's a good chance they hadn't even heard of FTX. And what that means is that if we just buy a lot of Google ads, I don't know, there's sort of like, crypto company you've never heard of runs an ad on Google or Facebook. It's not very compelling. You probably assume it's basically just a scam. And sort of more generally, the sort of brand that you need to engage with consumers, we didn't have. And so rather than, just try to mass acquire a ton of retail users with advertisements that probably wouldn't have worked, what we've really been focusing on is trying to communicate to the country and the world like who we are as a company. And, I think that means something that's punchier, something that's more compelling, and something that says more about us than we can usually fit in an advertisement. That's really been the goal of a lot of the partnerships that we've been forming. And I think we've had really, really striking success with that. Witness the fact that you felt compelled to ask about it here, right? It's sort of like one example of just the reach that I think that those have had.
Yeah, and it's not just the ads. I mean, it's also the capabilities you've been adding, as I said, kind of recently adding on NFT capabilities here as well. What's been kind of the early takeaway in what person that is drawing in crypto versus maybe the people who came along first in the Bitcoin and ETH wave back in 2017?
There are similarities, and in particular, there are similarities to the people who have been here for a while. NFTs have had an absolute explosion in usage over the last 6 months, but it is still predominantly driven in most places by the crypto industry rather than by newcomers. There is some excitement from newcomers, and there's a huge amount of excitement from partners to build out new products involving NFTs, which I think could be really, really exciting. But I don't think that it has yet caused millions of people who had never touched crypto before to engage, at least not with FTX. I think the biggest engagement that we've been getting at the beginning is from existing users of crypto, whether or not they're FTX users. I think that's going to change over time, but I think what that's going to take is NFTs starting to get integrated into other systems in people's lives, whether they're tickets, in-game items, or other things.
I guess the one similarity, too, between all this is the ability to make a lot of money. And that's really what draws people into crypto. I think if you're not in it, there is one project that you've been a pretty early backer of, Solana. I know you've been talking to them, and obviously they've got a lot going on in Lisbon this week. When you look at that, though, it's up almost 12,000% over the last year. And when we talk about projects like that in terms of efficiencies of scale and speed, a lot of people point to whether or not that might take away from potential upside in Ethereum. I mean, how do you look at maybe how that battle plays out over the long term? Obviously, in the short term, when everything else is in a bull market, everything's going up, that's one thing. But does it maybe cap the long-term upside from some of the other competitors to Solana and then also to Ethereum?
It's a good question. And, there's always going to be both collaborative and competitive forces between different crypto projects. We see this with us and a lot of other exchanges. And we always try and play the collaborative card when we can. I think what I would say is that what I see as the biggest upside of Solana is, the potential ability to scale to a point where it can service an absolutely enormous number of users and an amount of information transactions. If you think about like what does a mass scale application business or something like that look like, you're talking about hundreds of millions to billions of users. You're talking about millions of transactions per second. You're talking about billions to trillions of dollars. That millions of transactions per second, it really is a requirement of almost any mass scale system. And so I think that Solana is one of the few currently existing public blockchains that has a really plausible roadmap to scale to millions of transactions per second at fractions of a penny per transaction, which is the scale that you need for this. I think that is not where a lot of other blockchains have been focusing, including Ethereum. I think what that means is that to the extent that the goal of a blockchain is to service a billion users, absolutely, I think that there are competitive instincts there. I think you could imagine collaborative instincts to the extent that other blockchains are focusing on a more concentrated, smaller type of usage.
The other interesting thing too, I guess, in the run-up, as you've pointed out, there's been a lot of institutional interest in the project. And I guess that's one thing that might change in terms of the speed at which institutional investors are going deeper and deeper into the crypto space. It took a long time for them to dip a toe into Bitcoin, maybe a little bit shorter to dip into ETH. But now as you see that interest from institutional investors shape up, how big of a driver is that, not just for Solana, but for some of these other projects as well, in what we could see in how quickly these projects do pop?
So mark to today, like if you look at sort of like all of history up to today, frankly, actual institutional adoption and inflows themselves have not driven very much. Now, the anticipation of them has, but the inflows themselves have not yet materialized. You talk to most major institutions, they will tell you they're getting into crypto and they will tell you that it is not happening tomorrow. It's going to take, a year for many of these places, sometimes multiple years. The amount of work that a compliance department has to do to get acquainted with the cryptocurrency ecosystem, become comfortable with it, is fairly significant in a lot of these players. So it has not been driven by the actual inflows themselves, although the anticipation of those has been a huge factor. All of that being said, the world is speeding up. It's speeding up in every way. And it's going to be speeding up in these ways as well. And so I think the sort of timeframes that we imagine transformations happening on, both in terms of what technology can accomplish, the adoption it can get, and the institutional support it can get, I think every year, those timeframes shorten a little bit. And we see things turning over faster and faster and getting adopted faster and faster.
Oh, it's been a good call so far. I wanna ask you though about maybe the flip side of good calls. Let's talk some bad calls. Obviously, it might be hard to think of an example here, but we've been chatting with a lot of experts today about their experiences in crypto. I'm curious if there's one that maybe stands out to you as a big crypto mistake that you made in your career, and I guess if there isn't one that you'd point to, what you see from newbies in the crypto space as one that maybe people getting in should avoid.
I mean, so the biggest mistake I made, which is only sort of an answer to the question, is not getting involved sooner. And I mean, this is something that I think about now, and that is, I had a friend who built a Bitcoin arbitrage bot in 2012, 2013, something like that. I kind of checked out. It's kind of cool. Nothing came of it. 5 years later, we would get into crypto together and end up founding FTX together. I sort of imagine what would happen if we'd sort of chased down that rabbit hole much earlier. But I think putting that aside, there are a lot of things that I think have taken me a while to really understand. And I like certainly wish that I had earlier. I think that there's a lot of opportunities in the space that did not gel to me until the last year. I think one of them is thinking about what a consumer financial experience could look like, what a comprehensive one could look like. I think one of them, frankly, is just understanding the some of the regulatory regimes that we see. And I think that there's a lot of opportunity to offer new innovative products in a licensed manner. And I think I'd been underestimating that earlier. And I think that was certainly, certainly a mistake. And we could have begun on some projects earlier, I think, than we did. And And then I guess there's one other thing. I wrote something about this a few days ago. Is there have been a lot of like annoying quirks of FTX's user registration process. Every time that I try and walk myself through it, I'm annoyed at something. And just things like you got to enter your address 2 or 3 times, and that like takes a while, and there's like no good reason for that. And lots of variants of that, of just like a process that was not nearly as sort of tightly constructed as it could have been. And you know, the sort of like hits of that causes on user adoption are pretty significant, right? Like every extra 10 seconds that it takes someone to go through a process, there's a chance that they just drop off, especially if it seems sort of frustrating and silly. And this is something we could have addressed this earlier. It's not that hard to at least do a decent job of this. I think we're starting now to. We've made a number of changes in the last couple of weeks. But you know, I sort of wish that we had taken that seriously earlier, and a lot of people had brought this up to us.
I feel like maybe some people listening to that as a big mistake might give you a pass on that one. And they also might point out, you know, that it's hard to think you having crypto mistakes, just kind of given the upside and the wealth that you've built. You've been pretty outspoken about what you intend to do with that wealth, and you take a long-term view about the charitable giving prospects that you're looking forward to doing. It's been strange to watch people maybe critique that aspect of it too, saying, look, he's built all this wealth. Where is he going to give it to, and why hasn't he given more? Comparing it to about a $15 donation to a Salvation Army bin, if you want to look at it that way. Also, millions of dollars is more than basically I think everybody in this room has ever donated in their life too. So, I mean, when you look at the long-term take that you're giving for charitable giving, how are you developing that thesis and what you want to do to create lasting change? And when can we expect maybe some of those big announcements? I know you're going to be talking to Give Directly next month.
Yeah, so, you know, I started giving something. I've probably given 30 million or so this year. Some of that has been, I think, talked about more than others. But, you know, I think one thing to note is that, you know, I'm not super liquid as far as these things go. You can sort of look at you know, mark to market, you know, valuations and things like that. But all of my you know, all of my worth, so to speak, is just wrapped up in like the equity valuations of like the, you know, companies. And so, you know, particularly like FTX's valuation, which means that like, you know, the actual money I have in my bank account is I mean, it's certainly under $1 million, certainly well under that. So that certainly is one limitation on giving speed. But I think, frankly, another thing is just you know, making sure that I'm really excited about where it's going. And, you know, I think that the difference between a good and a great place to give is absolutely enormous. It's orders of magnitude. And so what are some of the things I've been looking at and I think sort of investigating more and have started giving to? One of them is, you know, around biosafety and pandemic preparedness. You know, if you look at things that could potentially have massive negative impacts on the world in our future, we are unfortunately getting to a place as you know, as a society where you know, bio risks are amongst them. You know, every year biotech gets more powerful, and this has a lot of really amazing benefits, and it also has some side effects. And you know, one of those is the amount of damage that we can do accidentally to the world. You know, I think that one thing we've seen over the last few years pretty conclusively is that we absolutely are not ready for a pandemic. We are not ready for, you know, basically any bio risks. And you know, I think basically no countries have managed to like handle COVID well. And the next one could be worse. Like this, you know, it's not the most lethal disease ever, despite its sort of massive spreading. You know, what if it were worse? Would we have been able to handle it as a world? Like I wish that I were more confident in that answer than I am. So I've been, I mean, doing some, a lot of research on this, a lot of talking to people, and some work on, you know, arguing for, you know, more preparedness for the next pandemics. And, you know, I've done a lot of work in DC on that, and have given a bunch to that. Because I think that's one of the most important things that we can be working on now as a society in terms of, you know, things which are potentially world changing and also potentially actionable, where we can actually do things today, to help prepare for that.
Yeah, and at scale, as we talked about, in terms of the wealth that's been built there. So we'll be watching for when those developments happen. To close here, though, Sam, in terms of I guess some of the bold calls that we've seen out of you, clearly some of them have been right. Most of them have been right here in 2021. When you look ahead to 2022, though, what would be, if you can leave us with a bold call for crypto, one thing specifically that you'd come out and say, I'm feeling pretty confident about this happening next year?
I think that we're going to see. I don't know exactly what time frame, and I want to be cautious about saying that it will necessarily happen in a year. But I think that we're going to see some real changes in the US crypto landscape. And I think this is going to be interfacing heavily with regulators. I think that part of this is going to be licensed activity, which will hopefully be coming online. We're optimistic that FTX US derivatives will be a part of that. I think part of this is going to be work with the SEC on, tokens that may be securities and, registrations and regimes related to that. If you look at, I think sort of one stark thing here, if you look today at the global volume distribution in crypto, it's 90+% offshore. A fairly small fraction is in the United States. If you instead look at something vaguely like IP production, right? The majority of token projects have been founded of top token projects, at least, have been founded by US citizens. A lot of the other projects have as well. There's a pretty big discrepancy right now between the actual adoption of crypto and a lot of the development of it. And I'm optimistic that we're going to see a healthy, strong, and innovative US crypto scene developing in concert with regulators over the next few years.
Well, I know you've been having a front row seat chatting with all those regulators yourself. It's been busy times here this year. Sam Bankman-Fried, the CEO and founder of FTX, joining us from the Bahamas. Appreciate you taking the time here to chat. Thanks again. Welcome back to Yahoo Finance Live. Today at the Aspen Security Forum, SEC Chair Gary Gensler has been speaking about potential regulations coming to the cryptocurrency sphere, hinting at an openness, though, for an ETF. Of course, the agency has delayed on approving more than a dozen Bitcoin ETF applications as they wait to try and nail the right way to regulate. And all of that comes as we see congressmen and women push to include up to $30 billion in taxes in the infrastructure push as well, potentially hitting the crypto sector and again, bringing attention back to regulations in the space. And for more on that, happy to bring on the CEO and co-founder of FTX, Sam Bankman-Fried, joining us once again here. And Sam, good to have you back with us. I think right now, obviously, the big headlines we've been watching is Gary Gensler potentially talking about an openness to that ETF, because we hear so much about how that would bring institutional investors back into the space and make it easier for money to flow in. But you as an exchange, I guess, how does maybe that conversation shift what you'd be doing as a business?
Totally. And first of all, it would be a big deal for this space. And the biggest thing is people who know how to hold securities, but don't know how to hold cryptocurrencies would now have easy access to crypto. By the time you're on FTX, it doesn't matter because you can just buy Bitcoin straight up. You don't need to route through the ETF model. And so it's not directly relevant necessarily to FTX. That being said, I think signaling an openness to innovative new products in the US crypto ecosystem is absolutely huge. And it's not that the US has been necessarily averse to it. Frankly, I think not that many people have tried. But I do think it's really encouraging to hear that Gensler is excited, at least in theory, for them.
How many more investors do you think that brings into the fold? And I know we're talking a very broad question here, but if it really is about bringing more institutional names into the fold here and expanding and growing the space, what do you see as the potential through ETFs?
Pretty big. So, one thing you can do is you can look at, on the sort of consumer side, you can look at users of, stock brokerage apps versus cryptocurrency brokerage apps. And, there are more users on the stock side. I do think that the fact that this would be available on, E-Trade, on, Webull, in addition to platforms like Robinhood that already offer crypto would be big. But even bigger would be things like pension funds, mutual funds, lots of, fairly conservative, regulated entities that have collectively trillions under management, and right now don't have a really easy way for them to hold Bitcoin that doesn't involve building out new systems. This would make it easy.
Yeah, Galaxy Digital, Mike Novogratz, founder rather, he's always talked about how the ETF would bring people into the tent, so to speak, to kind of get them interested in Bitcoin. Yeah. If that's the way they get involved, then they turn to more, advanced things like what FTX offers. But you guys don't just have that platform, you also have FTX.us, and you've talked about 150 times liquidity growth there on that platform. It's really taken off. You also, of course, last time you were on, we were talking about the $900 million you raised and how you might be looking at M&A opportunities. But specifically in the U.S., we also got this proposed bill from Representative Don Beyer talking about potential regulations around restricting private stablecoins and looking into maybe giving the SEC even more power to regulate some of these things, lending platforms, services, the like. I mean, does that maybe change you in looking to grow the U.S. market, or more money that you'd be putting there and pushing it elsewhere? Talk to me about how it might change the investment philosophy.
Some of those are, if anything, even good. We know that more regulation is coming. It's been coming for a while, and we've been acting as if it has already come in a lot of cases, and we're ready for it in others. It's not coming as a surprise to us. We know there's going to be further SEC comments on which tokens might be securities. We've been conservative on the US side, listing wise, pending more color. And, on the stablecoin side, we'll have to see exactly what form it takes. There may be some adapting of the stablecoins, but we're ready for that. That's not going to be, massively changing our business. Even if we do, change it here and there, to be in line with, all the color that we're getting sort of in real time from regulators. But, frankly, if anything, I think it might give us more clear avenues to product releases.
And Sam, speaking of increased scrutiny, you've got this provision in the Senate's infrastructure bill that essentially cracks down on taxes for those who are trading crypto, essentially calling on brokers to disclose the information. I'm just curious what you make of this provision and what you think the impact is going to be more largely on the space.
Totally. So there's sort of the obvious piece of this that everyone knows is going to be coming and getting clarity around like U.S. crypto exchanges. Basically having tax reporting duties. That is not a surprise at all. We've been assuming that's coming any day. There's more complicated questions about what the impacts are on non-US cryptocurrency venues, and some phrasings of this bill, might envelop those as well. That would be a little bit more odd and complicated, but frankly, that's something that we in the industry can adapt to. I don't see that as being, unmanageable in any way. I think that when you look at the odder implications of it and some of the worries that some people in the industry have, it's around some of the broader phrasings that have been proposed for this bill that risk sort of like, wrapping in, something like a Bitcoin miner to this language in a way that I don't think is intended. But some of the language just sort of hasn't clarified what its stance would be on a large number of sort of semi-passive players in the industry. And so I think that that's sort of like what, I know a lot of people have been working on, with respect to this bill is just getting clarity and, on the scope of who it's pushing at and clarifying that this is something that's going to be affecting, certainly US crypto exchanges, maybe a bit more broadly than that. But, I'm guessing not intended to affect nodes propagating blocks on the blockchain.
Yeah, and then, you got kind of the other side of this when you look at the specific digital assets, which might be commodities or securities. Bitcoin, of course, now kind of looked at as a commodity, not needing to worry about that issue. But when you talk about the other ones, and liquidity volumes there, some of those, more alt side of the trade, it does make up some pretty significant volumes here. I mean, how important would it be if we talk about regulation, some of those things getting taken off platform to say you can't trade them as a broker, as an exchange? What's the impact there?
It's a good question. So the first thing is that the majority of crypto volume globally happens in cryptocurrencies that are widely believed to be commodities or similar in the US, not close to 100%, but above 50%. And so it would certainly have some impact. It wouldn't be earth-shattering impact. And the second thing I'll say is that, one thing, and I sort of want to apologize to the customers to some extent for this, but FTX US has listed substantially fewer assets than most US crypto exchanges has. And the reason for that is, just questions on what exactly is a security, what is a commodity in this space. We are expecting to get more clarity on that coming down the pipe. We don't anticipate that it's going to mean major changes for FTX US. We've been ready for that. Like, we've sort of made a lot of decisions with that in mind, assuming that will happen. If it means changes to what we offer, that so be it. But frankly, I think it's not going to be a major shock to FTX US. I think it might have larger impact on some other venues in the US.
All right, FTX co-founder CEO Sam Bankman-Fried coming back on with us. Appreciate the time, man. Be well. We'll chat soon. Crypto and the sector as a whole has a new reason to celebrate when it comes to enthusiasm for the space, and one company in particular has 900 million reasons to celebrate. The largest ever private crypto funding round coming for FTX, the crypto exchange led by Sam Bankman-Fried, that now sees its valuation up to $18 billion, a far cry from the $1.2 billion valuation it had just about a year ago. And for more on the deal, I want to bring on the CEO and co-founder of FTX, Sam Bankman-Fried, joins us once again. And Sam, appreciate you coming on here, man. I mean, you attracted money from a lot of big name investors, SoftBank, Sequoia, Coinbase Ventures, Paul Tudor Jones, even getting in on the deal, plus a lot of others. 900 million is a lot of money. I mean, what are you looking to do with it now that you have it? Because FTX has already been growing.
Bigger yachts. No. We're in a fortunate position where we are profitable, and that is even sort of through the various endorsement deals that we've been doing. And so the primary thing that we're looking at with the funds is basically M&A. There are a lot of companies that we think we could do a lot with, and some of those might be on the more expensive side. And this will give us a ton of flexibility on that front.
Yeah, I mean, when it comes to M&A, I wonder what looks most attractive to you for growth. If FTX is already growing rather quickly, we're showing the exchange volumes there per month on the screen. But when you look at what looks most exciting to you, what is it you'd want to add to FTX?
Yeah, so I think that there's two pieces of this. One is when you just look at the user base. I mean, we're really happy with the growth that we have in the product we've built. We're also late to the game as far as crypto exchanges go. A lot of them had tens of millions of users before we turned on. And so any ways that we can really get our product out there in front of a lot of users, I think has huge value to us. And so I think that's one piece of this, products that already have very large user bases. I think another piece, in some cases, from a licensing perspective, it can be useful. That depends. It doesn't make sense in all cases, but there's some where it can work and be quite valuable. And we're aiming to be as licensed as we can be, as an exchange. And then the third thing is, I think there are cases where our products are very synergistic. We can easily add crypto trading and payments, on ramps, off ramps, wallet services, to basically any product or application. And so anything that would, that is sort of in desperate need of that, I think would be a really attractive company to be working with.
As you think about how to expand what you offer right now, I mean, to your point, you were a little late to the game when you compare it to your competitors. I mean, who do you consider your biggest competition right now?
Yeah, so I think it depends on which jurisdictions and products they're looking at. I think if you look in the States right now, obviously Coinbase is going to be the first name that everyone says. After that, Kraken. And then you have players like Paxos, which are on sort of more of the licensing and white labeling and back-end provider front. But you also have players like Robinhood, which are on the sort of consumer side and flexing into crypto. When you look internationally, I think that we're something like the fourth biggest by volume today of exchanges, and it's Binance is the biggest by far. They're the biggest competitor globally. And then you have, Huobi OKEX. We're probably the largest exchange outside of China. But we're still 5% or so of the market share globally, maybe 6% now. There's a lot of room to grow there.
You might have some people looking at it and scratching their heads and wondering, obviously you still maintain majority control of the company here, and you look at, raising $900 million and the pressure it adds. I mean, if you got 60 investors now to answer to, was there ever any idea here that you might not want to go that route, especially if, how profitable the company is? If you wanted to go that route or wanted to maintain independence, and I guess what it sets up for the public road of FTX and what you're thinking on that front when it comes to what seems like, you have this whole aura of doing things your own way.
Yeah, there's a bunch to unpack there. So one thing I'll say is why bother doing this in the first place? And, the capital for acquisitions, I think, is a piece of it, but another piece is just building out partners and allies. We have a lot of those in the core crypto ecosystem. We've had a lot of really great interactions with core players over the last few years. We have a lot less of that when you venture outside of crypto, and we're trying to build that out. And I think this round was a key piece of accomplishing that. So I think that's sort of the impetus for it. And then when you look at, you bring up what I think is an incredibly important point of, can the company still be able to function in a nimble way? And I think the answer is yes. And, I'll be frank, that's how this was designed, and that's how this round was designed. This was not a round where I was selling out of the company, taking a back seat, and it was going to be sort of, governance by committee. This is, we're going to continue charging forward in the same ways we have been, except hopefully with more ammo behind us as a company. And that sort of is something that's been explicit to everyone in this round. We're really excited to have them as partners and advisors. But this is not a thing where there's going to be 60 votes on every product tweak that we're going to be looking to make.
You've had, obviously, one of your competitors, Coinbase, come to market. There's a lot of people who are looking to your company to say, well, what's next in terms of a potential listing? You've made no secret about those ambitions, but you've been able to raise so much money on the private side. And I wonder what the incentive is. How attractive do the public markets look for you right now?
Yeah, mixed. I think, we still see significant upside in it. I think in terms of especially the exposure we get, how easy it would be to form partnerships with companies, I think those are huge upsides. As you said, the liquidity for the equity is not the biggest concern for us. It is fairly liquid in private markets as is, and we don't need to raise a lot more. And so I think it would be less from that perspective. And then on the, why not do it? It's a hassle. It's like, I think sort of we're coming back at you and thinking like, I don't know, we could roll out these 4 products, or we could try and go public. I don't know, which is better for the business, right? And being a little bit glib there. And there's more going on than that, but that really is a lot of it. I don't know what the right answer is, but what we're sort of trying to do is position ourselves that we can do it if we want. We're, in terms of getting audited, in terms of obviously racing this round, putting together a board, things like that. We want to be in a position where we can seize the moment if it feels like the right thing to do for the company, but where we don't have any pressure to go public if it doesn't seem like it's the right thing for the company. And, I don't know how this is going to play out, but we're working to keep our options open.
Yeah, I guess, keeping your options open is a good thing. That's one way of measuring success, I suppose. But I am curious, just to kind of wrap up here, what success looks like to you now after already leading the largest round in crypto. What you are going to use as, I guess, your mark for success moving forward. Is it going to be kind of acquiring one of these major competitors out there now that you have this stash of cash, or is it going to be one of those white label deals that you're talking about to really cement FTX in that space? What is it that you're going to use, maybe the biggest measure of success in the year to come?
Becoming twice as big as whenever you ask me that question. I could give you an answer right now, but I very intentionally update those goalposts as we grow, because they're arbitrary, right? There's always more. There's always a better job that we can be doing. There's always more products. There's always more licenses. There's always more users, and there's always a better experience for everyone involved that we could be creating. I don't think we are anywhere close to being close to running out of opportunities or ways to improve. And any sort of like benchmarks we set for ourselves, they're going to be arbitrary, and the goal will be to blow past them and then create a new benchmark. I don't have a point in my mind where I'm like, yeah, once we get there, let's half-ass it. That seems like a good plan. No, that's not how we're thinking about this.
Yeah, I wouldn't expect that from a company that just went from 1.2 billion in valuation to 18 billion in a year's time, but also wouldn't expect it from Sam Bankman-Fried. Appreciate you coming back on here to chat with us again, man. Congrats on the deal, and we'll be chatting soon. Welcome back. In today's Crypto Corner, crypto exchange giant FTX has been on a bit of a spending spree when it comes to attracting new customers. Not only did they become the first crypto company to win naming rights to a major U.S. arena in their sponsorship of Miami Heat's arena, but they also shelled out $210 million to rename a major esports brand TSM to TSM FTX. And now FTX is making history again, this time becoming the first company to work out a new partnership with the MLB to get FTX brand patches on umpires for the upcoming season. For more on that and the current state of crypto, happy to welcome back into the show FTX's founder and CEO Sam Bankman-Fried, joining us here again. And Sam, obviously want to get into the state of crypto as we're seeing that play out right now. But first, I guess we'll start on this partnership because you've been so active. What brought you to the MLB this time, and what are you looking to do with this particular deal?
Yeah, I mean, they're one of the the organizations with absolutely massive reach. And it's a sort of cool patch on every umpire, which I think is pretty creative. But I think beyond that, we were excited about how excited they were about this, and I think that's really important for us. Everyone can tell if these are authentic or inauthentic, and the fact that MLB was excited to work with us, and they've been great to work with. They've had a ton of good ideas. Just means there's so much more opportunity to collaborate on things, and I think that's the single thing I'm most excited about with this.
Yeah, and I mean, last time we chatted in Miami at Bitcoin 2021, you were talking about how the crossover in esports made sense for a lot of maybe the customers you were trying to attract. Miami Heat, you got the MLB. I wonder if this is it, or if there's more pushes in the sponsorship deal, since you guys have gotten quite creative with them. I mean, how many different avenues are you looking to maybe tap into crypto curious customers out there?
I'd be lying if I said there weren't any more being planned.
That's deep.
Yeah, I mean,
now
I can't
have to ask you a follow-up here on what kind of timeline you're looking at on additional announcements, because it sounds like you've got a pretty big build-out coming.
Oh, I can just see our agents texting each other, hoping I don't say anything right now. But no, I mean, I think over the next couple of months, there's going to be, I would be surprised if there weren't at least one more thing coming out. So.
When we look at what's going on in crypto though right now, Sam, you're one of the smartest guys that I talked to down in Bitcoin 2021. And when we look at the space, I mean, I know that you and I, neither one of us really like getting into short-term kind of price calls. But when you're seeing it play out and kind of the excitement around this, the volatility angle, the idea was that, you had so much institutional money flowing that we weren't going to see kind of a big drawdown like we saw play out in May. And yet that is happening. I mean, where do you put us at in this cycle? And maybe what do you see right now, as a lot of people may be nervous after that sell-off?
Yeah, so on the one hand, I think, the institutional money is still planning to come in. It's going to be months to years. These are a lot of slow-moving, careful institutions that are making, decade-long decisions about what they're going to do with their businesses. They don't move overnight. And, I think we're going to see some starting to trickle in now, but I think, frankly, it's going to be a year or two before a lot of them have started getting involved. So, a lot of things can happen between now and then, I think, before that money really does start going into the ecosystem. The one thing I will say is that some of this sell-off has been driven by liquidations, leveraged long positions that got blown out. And the potential for those to drive things down is down. If there's a lot less of that now. Just open interest is down a lot. A lot of the people who could get liquidated did get liquidated. There's a lot less froth in the market, and you can see this from a lot of different aspects. One thing I often look at is the interest rate curves in crypto, whether you're looking at borrow costs or whether you're looking at futures premiums. Both of them, for the first time in a year, are showing negative interest rates looking over the next few months, which is, while not a bullish sentiment, it is a sign that people are no longer holding a lot of net risky long positions.
If you look at some of the notes we've gotten from some banks, I mean, it seems to suggest, if we're talking about institutional investors, there are those who have sort of exited their positions, maybe on the back of some of the volatility. Yep. I wonder what you've seen on that front. And if we're talking about a catalyst to push the price even higher, does it ultimately just come back down to institutional money, or other levers that you're looking at?
Yeah, so first of all, I totally agree. I think short term, this is very bad for institutions. And in terms of their excitement about crypto, I think it's going to delay their entrance to the space by months. And I think it did cause some of them to sell out. And I don't think it's going to stop them from coming in, but I think it's just going to be slower. Other than that, what could cause further excitement? I mean, anything could, who knows, right? Like if Elon falls back in love with Bitcoin, who knows what happened to markets. But I think that like, one example could be starting to see more integrations of crypto into the world, starting to see it used for payments, starting to see it used. I mean, you had the El Salvador announcement. I don't think that's that big in and of itself, but if it is the sign of further government acceptance, that would be big. Starting to see regulatory clarity, which I think will come, but it could be a little while. But if that starts to come out, especially out of the United States, I think that will help give this space the comfort to move forward on some things. And starting to see a lot of infrastructure providers start to integrate crypto into their services. I think those are all things that could help drive crypto adoption.
Well, we also saw Chinese miners moving out, right? And the clampdown there. Yep. I mean, in the short term, a lot of volatility. We saw that play out just because you have pieces of the network moving off and coming back online in other spots. I mean, are you surprised at maybe how that's gone and how the network's been able to maintain itself through all this, and maybe the fact that it's being overlooked, that things kind of went smoothly?
Yeah, it did go surprisingly smoothly. I think part of this, honestly, is like there's sort of the lowest cost ways to mine Bitcoin, but there is enormous potential to quickly spin up higher cost ways to mine Bitcoin. So there's a limit to how much this can blow out and how much the network can decay from this. These miners had months of warning. They weren't sure, I think, that they were going to need to move out, but they knew there's a chance. Many of them were making plans, securing alternative sites in other jurisdictions. By the time it happened, I think a lot of them were ready for it. And there's been a growth in mining in other countries, including the United States recently, to help buffer this a fair bit. And then the last thing that I'll say, frankly, is the fact that a lot of hot air is out of the system right now means that there's less short-term demand for transactions. And so the network can sustain a bit of a hash rate hit better than it could a month and a half ago.
And lastly, I mean, you were tweeting, it caught my eye just because, we work here mostly Monday through Fridays. We've talked a lot about tokenized stock offerings and platforms offering that. FTX, of course, partner with Switzerland-based Digital Assets AG, to offer customers who've already gone through KYC, Know Your Customer documentation, to trade 55 stocks 24/7. And I mean, it was kind of weird to watch Coinbase list on the NASDAQ. You think about the largest U.S. exchange on another exchange, and maybe at one point, if those were to flip in size. I mean, how do you see maybe traditional stock exchanges like yours and other ones out there kind of colliding in this space if you are able to trade tokenized stocks? Now, how do you see that evolving in the next few years?
It's a super interesting question. No one knows for sure. But I think you're raising a really good point here. And I think people focus a lot on DeFi applications of tokenized stocks, which I think is super exciting. But there's this other thing where there are kind of alternative fintech rails being built out, between the crypto native products and the stock native products. And both of those are going to maybe end up offering both stocks and crypto, but the format is going to look a little bit different. And I mean, look, we'll see what happens. All I have to say is, I've sort of made my choice about what I think is going to give the best product experience. FTX is basically the only 24/7 stock market in the world on FTX.com. It's cross-margined with all of the other products on the exchange, instant settlement. And I think there's a ton of room to innovate in all of these categories and a ton of room to build a really beautiful, powerful user experience in a way that I think everyone feels they're not quite getting with their current products. And this is like a core thing I think we come back to again and again. Do people love the experience they have right now? And for stock trading, the answer is no. No one will tell you they love the experience they're having with their applications. They're okay with it. It's kind of enough to get the guy. It's a lot more they'd want. There's some issues, but they can do it. And I think that's a sign that there's progress to be made there.
And I think it's probably a sign as to why you're spending so much on these marketing deals to get more people to be taking a closer look at FTX. But Sam Bankman-Fried, always love having you on, man. We could talk for hours, but hopefully we get you back on soon. Be well.
Thousands of people descended on Miami this weekend for the world's largest crypto conference, including our very own Zack Guzman, who joins us now. So, Zack, you survived the conference. I know there were lots of heavy hitters there. Twitter CEO Jack Dorsey. You even had pro skater Tony Hawk and a cavalcade of crypto gurus. I know you had a chance to catch up with a few of them.
Yeah, but really, Alexis, the real excitement out there, as big as those names are, were some of these rock stars in the crypto world. Sam Bankman-Fried is one of them. Right after we wrapped up our interview, which we're about to play, a girl came up and had him sign her shirt. So, I mean, that's rock star status if you think about it. But some of the excitement came out of their big announcement that they had been that they spent $210 million. Keep in mind, the exchange that Sam Bankman-Fried runs, FTX, was also behind the big deal to lock up the naming rights to Miami Heat's arena out there in Miami. And this was another deal to really lock up naming rights, going out and spending $210 million to lock up those rights around an esports brand, TSX, to get them on here as well. TSM, I should say, to change the name to TSM FTX. And we sat down with Sam Bankman-Fried, the founder of FTX, the crypto exchange, to talk about why the naming rights route is where he wants to go to drive people to that exchange and what he has planned in those endeavors. Take a listen.
We're looking at places that we think have a really good sort of synergy with what we're doing. But I also think that given where we are, on the one hand, we were late to the game. Of the major crypto exchanges, we are by far the latest to be founded. And, we are by far the biggest of the 2019 and on era. And so that means that we, like lots of other exchanges, had 50 million users before we turned on. And on the other hand, I think, we've built some pretty cool products and been able to move the space forward and sort of innovate. And so I think that where that leaves us is really a position where, we have really high retention. People tend to like the product. When they don't, we fix it.
Yeah.
But on the other hand, we just don't have nearly as big of a brand. And we're trying to fix that.
It's also kind of funny because it'd be the equivalent, I guess, of maybe a Coinbase going out and saying, hey, Chicago Bears, change your name to the Chicago Coinbases or something. But I mean, explain to me about how big of a deal it is for people who might not know esports.
Yeah.
And why, TSM, you're wearing the jersey right here, is the perfect crossover.
So, I mean, TSM, by the way, has been absolutely phenomenal to work with. I've been super, super grateful for that. I think they're the biggest name in Western esports. They have been for a while. They've been, the best in a broad number of different games. And I think one thing that I came to appreciate as I talked more with them is that they're just really genuine. And, they weren't someone who just paid a lot of money to become the biggest and best team. It's fine. No, nothing against that. But, they've built a really, really great company. And I think that, that's shown in even just the announcement and the reel of it, which they made all those videos. They designed them, they wrote them, and acted in them. And it's phenomenally done. It's really, really impressive. And it's just they're so great to work with. But they are also, probably the biggest Western brand in esports.
Yeah, and like you said, I guess it's tough to kind of differentiate yourself in the exchange space. It doesn't necessarily sound
until you try the products, right? But that's the whole thing, right? Is that you have to decide what products to try in the first place.
Yeah. That's the thing. I mean, we'd probably be talking to you regardless of this deal or not. We were already going to be discussing some of this stuff because FTX is well known. Mike Novogratz has called it a very innovative exchange, not even just crypto exchange. But, I mean, when you talk about what you guys are trying to do versus what other ones are doing right now, what do you think stands out as maybe the biggest thing?
I think the innovation is the biggest thing. When we look at our product, we don't look at this in terms of what is the product that one launches next year.
Yep.
We think of it in terms of what is the product our users want? What's the product we think would be cool? And given that, what's the right way to design it? And then we look at what's out there and we see if there's a good synthesis of it. But I think what that leads to is that we've just rethought a lot of this space. We've rethought how you build out a margin system. We've rethought how you build out a product base and the set of products that you could have. And we have crypto, we have fiat. Internationally, we have stocks listed. We have prediction markets. We have the world's second most liquid Trump 2020 contract, which is a ton of fun. And I think it's just sort of the creativity and execution to just imagine something cool and just just go build it,
There's an interesting thing in the dynamic here, and I wish people could actually see this in person for those who couldn't come. I know you traveled a long way to be here, but you kind of have this persona here. You're rocking the gaming jersey. A lot of people are coming up to you here. I mean, you're well known in the crypto space from a while back in terms of the way that you were able to arbitrage some of the stuff in Japan, made a lot of money that way. I'd be curious to get your take now on like maybe some of those easier money maneuvers. If you think most of that, the crypto space has just matured beyond to a certain point where maybe some of the easy ways to make money there are gone.
Yeah, I mean, the space circa 2017, right, there's absolutely massive demand for crypto, massive inflows in a large number of countries, but there's just no infrastructure, right? There are no liquidity providers, the exchanges couldn't keep up, there's nothing gluing them together, no banks wanted to service the industry, and so what you're left with was massive volatility, massive price appreciation, massive demand, and a rickety infrastructure that couldn't support it. And so being one of those pieces of infrastructure would be incredibly valuable for yourself and for the space. And I think that, arbitrage was sort of the first stab at that. But what we quickly found was that, like, the exchanges themselves were often the blocking factor.
Yeah.
And for those who don't know, in crypto, exchanges are huge, huge entities because they're not just the matching engine. They're the whole process between the buyer and the seller. Right, they're the matching engine, the clearing, the custody, the margin, the risk, the KYC, AML, the GUI, the API, the mobile app. And so because of this, they really defined the experience for a lot of users, but they just weren't up to the task. And so I think the second thing we saw was just huge demand for this product, and the products are unable to keep up.
Yeah.
And we just felt like we can do better than that.
Well, now you've built it, and now it's catching on. You've also expanded beyond. You acquired Blockfolio, right? And we're talking about a way that people can track their portfolios across different entities and different platforms. I mean, how important is that when you think about how this space has matured for investors to really track, am I making money? Where's my money? I mean, talk to me about that acquisition.
Yeah. I mean, I think that, and it goes back to sort of, the naming rights to some extent. There's a parallel there of, where we're coming from is we had great technology, and we did not have 50 million users. But we frankly felt like people would love our product if they tried it. At least we want it, right? Obviously, if no interest in trading or crypto, that's totally fine. And, I recommend the interest you do have. We felt like we had a lot to offer, but we didn't have the reach. And then we found Blockfolio, which had a huge brand in crypto, a huge loyal user base, and didn't have the technology piece to supply trading to their users. And we basically saw a big opportunity to combine those together and use our technology to provide the investing and trading services to their users.
So there you go, Sam Bankman-Fried, the CEO of FTX. There, right after we wrapped up, not only did he sign the shirt of a woman who came up to him there, as a rock star does at one of these conferences, but afterwards headed over to the Miami Heat's arena there to see the unveiling of FTX's naming rights there at that arena. And I'm told more endeavors, more money over there at FTX. They're looking to spend a bit more on some of those naming rights acquisitions out there, maybe beyond the esports space. But we'll see what they do next. But clearly, a lot of excitement down there in Miami around some of these pioneers in the space, and Sam Bankman-Fried definitely one of them that's driving a lot of the innovation there at FTX.
Pretty cool for him. Signing shirts 1 minute, then going to the arena where your company is named the next. I'm glad to see you survive the conference. Thanks a lot, Zack Guzman.